Hi, everyone. This is Jason Burack of Wall Street from Main Street. Welcome back to another Wall Street from Main Street podcast interview. Today's special guest is a returning guest. He is the content manager at SD Bullion. He also worked many years with Michael Maloney over at goldandsilver.com, where he was, I think, in charge of marketing and sales. So James Anderson, thank you for joining me again.
Hey, Jason, it's good to be back. And yeah, that was I cut my teeth with Mike Maloney starting in 2008, and I rose to ranks of managing director. That was my name. So you were right. I was doing marketing and sales mainly at my original shop that I started in. So it's good to be here.
Yeah, now you do a lot of research on the gold market, silver market. You put out a lot of good short videos over on SD Bullion's YouTube channel. It covers a lot of analysis of gold and silver markets. So right now we're recording this interview on Thursday, March 18th. The gold price right now is at $1,736. The silver price is back above 26 at $26.09. Want to get your opinion on the physical demand for gold and silver. Does it seem that it slowed down a little bit lately? And why do you think that is the case?
So we got to kind of take into perspective. We had a historic February. Last month was absolutely probably the most sales that the bullion industry has seen in the modern era in terms of interest and capital flows that came into it. So we're not anywhere near those clips that we were, and especially toward the first half of February, it's kind of slowed down and tapered off. And I think a lot of it has to do with kind of the price moving on a sideways trend, and nothing worse in terms of interest and buying interest, et cetera, than a flat sideways price. We've been at this 26 level for a bit now. I'd have to go look at the chart, but it feels like months that we've been in this range trade for silver for so long. What you want typically, if you want a lot of movement and people buying, et cetera, is you want the price moving up or down drastically. That usually brings a lot of people in one way or the other. And so, for instance, like March 2020 with the COVID lows of 12 spot where bullion stayed almost 20 or above, those were good. That was a good time too. That was probably in recent last decade or so, that was probably the second most sales that this bullion industry has seen. So this past February was just, there was a whole confluence of reasons for it that we could get into if you care to know it. But in the end, it did turn out to be a huge sales month for virtually every bullion dealer. I'd have to go look again, but on like a napkin basis, if you look at how much capital was flowing into, silver ETFs like PSLV or into bullion industry, I know obviously what the numbers are that we're producing here, but I've heard others in our industry who are top 5 retailers online who gave out numbers. And so I can kind of infer from those numbers and kind of do my own back of the napkin calculations. But the amount of demand is going to blow away 2020. And we're on a pace that's absolutely insane. A pace where it's like you're going to have more capital flowing toward investment demand for silver than you will have being used in industrial silver. It's that's never happened. It literally is unprecedented. That's what we are. We are at an unprecedented pace right now. And, it's fine. In terms of bullion, you have it kind of works the way this industry's always worked. It kind of comes in waves. So you had a tidal wave that just came through. So the water's kind of calming, but if you look over your shoulder, I bet there's going to be a bigger one coming. And that's kind of how it works, So you have this really huge push of buying, and then it kind of slows down, and just wait. If you see silver pop over 30 and there's a big jolt and a big reason for silver to get running toward 40, there's going to be huge money coming into silver. We're still not at that level, Jason, yet where it's been yuppies buying silver bullion, but at some point it will be yuppies buying silver bullion too.
Yeah, right now they're buying Bitcoin, altcoins, these non-fungible tokens. I guess they're falling for all the celebrity endorsements.
Sure. Yeah. And stocks too, obviously the stonk meme, they always go up. That's still working and people are still chasing stonks, but there'll probably be some downdraft at some point coming up in the stock market. And the Fed will have to step in and just ramp and burr more. And, it's just, every time they do that, it just shows you, okay, we're on a road that's leading toward currency devaluation. There's no doubt of that. The only question is, can you measure it? Can you see it? Because a lot of the tools that we use to measure things right now are broken. And, it's hard to tell precisely exactly when that's going to become damn obvious to everybody and what that's going to do to the markets. But at some point it's got to come damn obvious that they have to devalue the fiat Federal Reserve note by a huge amount. And so do a lot of these other Western, indebted countries. They got to devalue their currencies. So it's this crazy race to the bottom. Bullion should do fine in that situation.
The Robinhood app is actually creating an enormous amount of stock options traders. And a lot of these people that are trading the stock options, they actually don't know anything about the stock market. We were talking about this before we started recording. And the knowledge of, I've talked with some of these people who are bragging about their stock options trades, like they got a stock tip from a Discord chat board or a TikTok video or a Snapchat video or, something on social media. And I asked them if they know anything about the company, the fundamentals. Nope.
Right. Yeah. Look, you really can't blame them, right? I mean, like the situation we've gotten ourselves into financially and the system and the way it is, young people, they don't get taught anything about finance at all. If you're going to learn about finance, you kind of have to self-educate yourself and, go to school. And if you're going to get taught Kinsey and jive, like good luck trying to make sense of all that and come out with a head that's clear enough that you can work in the real world using those skills. So a lot of this stuff you got to be self-taught. You got to actually be hungry enough to learn it. And a lot of people know that it's too much work. It's too much work. They just want to put something down on the roulette table. And if they win, they can brag about it. If they lose, they'll just, they just won't tell anybody about that loss. That's kind of how it works. So, and everything's in a big bubble right now too, Jason. We've talked about it, aside from commodities and precious metals. I mean, virtually every other market is in an overvaluation situation. And I mean, obviously, my contention is that will reverse, and you're going to see precious metals and commodities boom toward later on this decade, and that's kind of already starting. We're just getting the first cusp of it. I think COVID was a low. I think, sorry to say that word, and some people get paranoid about that on YouTube. But I've noticed that it hasn't been as sensitive lately. You can say the word pandemic and COVID and won't ruin your video. Sorry about that. I won't say it again. But I think the lows, March 2020, that's where the commodity cycle, super cycle really begins from. And I think we're going to start seeing that clear and more obvious as the years unfold.
The distortions that governments and central banks are creating are nuts. We were talking about this before we started recording too. The distortions, the divergence between rent. So in the real economy in major cities, rents are collapsing in a lot of these major cities. People are moving back in with their parents if they still have a job, which is not being counted in the unemployment numbers, versus how people in the DC metro area where I live and my best friend's a real estate agent, people are, if a halfway decent condo or house hits the market and it looks like an investment property for some people, the house is on the market for under a week. There's all cash bids. People are bidding these things up. There's bidding wars. People are paying over $50,000 the asking price, all cash in a lot of cases now around here. So that's a big distortion versus rents versus home prices, because I guess what the central banks and the governments are doing, they can't pay higher interest rates. And the central banks are all devaluing their currencies, monetizing the debt, expanding their balance sheets, and then lying about it, saying there's no inflation, or that currency that was created, James, is an asset swap. So yes, the currency was swapped for bonds, but they also forgot the part about how the currency was created out of thin air.
Yeah, I've been monitoring the fiat Federal Reserve note, what people call the US dollar, the M0, M1, M2, M3 bases of late. They just bastardized the M1 base. They threw in a whole bunch of stuff that's not demand deposit, like meaning that, you can't go in the same day and come out with it at a bank. So they just basically bastardized that number. So really you're stuck with just looking at the monetary base to try and understand how much currency is really getting injected. That's straight up, demand deposit currency and or currency that you have physically, right? So everything's been ramping, and it's like, you look forward and you're like, well, what stops this? I mean, I don't see how they stop this, because the system's even larger and the scale's even bigger, and it always constantly needs bailouts and constantly needs more currency to operate. So it's like
the system's a Ponzi now. It's a full-fledged government protected, government supported, government enabled Ponzi scheme, because the corporate debt, whether it's in China, the US, the European Union, the corporate debt has to be either newly issued corporate debt that grows, or the existing debt can't be paid, and that has to be rolled over too. And the same thing with government debt now. So it's all a Ponzi. Look, 24 trillion, right, was added, according to the Institute of International Finance, in the last 12 or so months to the total debt level total global debt to GDP is like 355% or something like that, depending upon how you measure it. No one in their right mind should be taking on more debt. And yet that is exactly what is happening.
I think what do people think? They think that we're just gonna. I mean, they must assume by taking on more debt that they're just gonna. They know in the future that the fiat Federal Reserve notes got to devalue further, and so as long as they apply it and don't misallocate it and apply it in the right real estate to cash flow situation, like say you buy a house in Washington D.C. and you rent it at a decent level and you can make a nice cash flow and a decent yield. I must assume that they think they could just pay back the principal on the loan pretty easily as the dollar cheapens as time goes on. I'm guessing that's the thinking. But, Lord knows, we could go into a deflationary nightmare at any point. They could lose control and you could just have this vortex of deflation kick in and people could be in real pain. So I think it's pretty risky. It's pretty risky to be timing this stuff like this and be going, super leveraged out on debt. I think it's just you just don't know what could happen.
Well, we did have deflation temporarily in February and March a year ago.
Yeah, that was.
But look how much Congress panicked and then went into the spending. Congress really only started to panic back then when the stock market crashed.
Yeah.
And so that was like their main course of action there, trying to, inject all this currency and credit, all this liquidity in the bailout programs that Congress approved, allowing the Treasury to set up Enron special purpose vehicles with the Fed. I mean, that's the one major thing, the rules change that no one's talking about, the special purpose vehicles. A lot of people have forgotten that. The Fed can stuff now, James, so many things off balance sheet, and we would never even find out about it.
I am sure they are already. I mean, like I'm sure there's stuff that's happening behind the scenes. Like remember when the repo loan fiasco began in September 2019? That's really what kicked this thing off. I mean, they've been rigging the silver price so hard since then, especially outside the New York COMEX hours. So you can tell when you look at the compiling data how things are working. I mean, they're in there more brazen than ever, trying to keep silver, at a polite price level, not blowing out and making a run toward 50. I think it's they're going to run out of time, obviously, in the next few years. I think, but yeah, it's tremendous what's been happening. And what you said about what's not been talked about is the fact that under the COVID situation, and we're still under that same, there's that word, I shouldn't have said it, under the pandemic that happened last year during March. The Treasury, the Federal Reserve, the private Federal Reserve, and the U.S. Treasury melded. I mean, they basically became one, which is something that, you wouldn't think would have ever happened. It's basically breaking all types of laws. We're basically becoming more like a banana republic in the sense that they can just simply monetize virtually anything now with their special purpose vehicle and their what's the thing called from 1934 that they use it's basically like the plunge protection team, and they can just go in and by law, they can just by edict and by fiat, they can just say
ESF, exchange stability.
Exactly. It's the Exchange Stability Fund, which is basically like the U.S. said in 34, we can rig any market anywhere at any time. I mean, it's basically like, okay, that's cool. And that's basically what they say.
The special purpose vehicles, though, give them unlimited off balance sheet like shell games. So they could set up all these dummy corporations in the Caribbean. Right. It's literally, they can move these things around just like, organized crime or mafia or drug cartel could now.
Right. Well, I mean, look, at the end of empire, especially when you're in charge of the financial plumbing essentially in the world, you would assume that it would come to this length. It would get to a length of complexity and absolute insanity. The thing is that it's just so complex and it's just so crazy. At a certain point, you got all these plates spinning, something's going to fall and break, and it's going to set up a chain reaction. And every time that happens, they come flooding in and freaking out. And so, the next one's coming. It's just like the avalanche that's just eventually going to keep coming. They keep coming. It keeps snowing at the top of the mountain. So here comes another. It's just a matter of time, I assume.
And I think the more accurate way to look at precious metal markets is with the premiums rather than the manipulated paper price. So in terms of the premiums that we had in the last couple months, were those close to all-time highs? I know they were high, but were they close to all-time highs though for gold and silver?
Yeah, they were all in a percentage basis. They were almost all-time highs. But the highest of all time was in 2008 in the fall, when banks were failing, and the industry industry can never keep up when actual demand shows up. It's just a starved out industry that goes through these cycles, like I said, of tidal waves of demand, and just when the tidal wave comes, there's no chance. So what defense do most of these dealers have? It's like, all right, jack up the premium so we can at least make a war chest on the little inventory that we keep. It cannot service this much demand. So to defend it, they have to jack up the premiums. Bullion goes off the shelf. They turn around to the mints and the refiners and they're like, we need as much as possible right now. And those mints and refiners are pathetically tiny. They just can't handle it. And so everything starts breaking down. It's the same thing that happened fall 2008. It happened in pandemic March 2020. And it happened this February, just a month ago. You have a situation where all the inventory gets basically bid off the shelf. And to replace that inventory is very difficult. There's delays because everybody in the world wants that inventory. And so everybody starts taking advantage of it and getting paid higher for it. And so it just creates this weird bifurcation where, spot price claims, what spot price silver claims 26, but to get a 1,000 ounce bar off the COMEX, it's going to cost you about $1.25 over to get it through the brokerage process. So you'll get it at $27.25 for the actual 1,000 ounce non-homogeneous bars. I mean, if you want to go out and buy smaller pieces like rounds and, little bars, et cetera, supposedly the cheapest ones that are created by private mints in the US or around the world. I mean, the lowest you're going to get right now is maybe a touch under 30, if you're buying in real size and scale. And then, it's just, you move up on the sovereign coin level, it goes even more expensive. So yeah, we're still in a situation with bifurcation in terms of the prices of bullion versus whatever they claim is spot price. And it just shows you that the market is it's led by an irregular situation where the derivatives kind of dictate what supposedly the price is, but then also at times the bullion market says, I don't think so, Jack. Here's a new price. We'll see what kind of bids I get for it. So, you'll have a spot that's 26, but you'll see American Silver Eagles being sold at 35. We'll see if we get any bids on that. And then you go look at eBay, you see people are actually selling. I look at it all the time because it's one of the more transparent ways to figure out whether or not the market is bidding for ASCs at that price. And they sure as hell are. You find people, even, small people who are buying on a retail level, buying onesie twosies here and there, or people buying a tube here or there. The premiums they're willing to pay are pretty tremendous in size. And you ask me on the historical level, I would say right now, last year in March too, that was like second. Those two timeframes are second only to the 2008 global financial crisis. But I think before this plays out, ultimately, Jason, I think we're going to blow out the 2008 global financial crisis, where I think silver maybe premiumed up to 70% over spot. We had gold gap up to like 30-40% over spot at times. I mean, I remember selling a kilo bar, Jason, for like 900 and change, and the spot was at 700. That's ridiculous. I mean, that's like a kilo bar of gold at a premium about 33% over spot. I mean, it just showed me at that time. I'm like, they can tell you what spot price is, but in the true reality, when people want the actual thing, you basically get the market make prices. Price can get really silly in terms of the upside.
And is it normal for bullion dealers then to start taking advance payments on coins like American Silver Eagles that they might not get in for weeks, because that was happening too for a while?
They will do that a lot because they want to take advantage of the demand and get the price locked in and hedge the a lot of them will hedge the exposure that they have then, and they know they're getting a certain allocation from the U.S. Mint. So they have a certain allocation they know, and they can kind of put their neck out for only so far. But they will do that sometimes. I mean, in 2008 global financial crisis, there were dealers who were so aggressive at that they would stretch out 2 to 3 months in terms of delivery delays, and they would publish that on their website. You start to cross the line between what's a derivative and what's bullion. I mean, it literally, the CFTC says, I believe after 30 days, there should be delivery of some sort. So if you start crossing that line beyond 30 days, it becomes questionable. And it's like, the CFTC actually could argue jurisdiction over that. I mean, that's how ridiculous it can get. So are we at that situation right now? I mean, we get a couple of weeks delay for most of these, high volume bullion dealers, but like I said, this industry is not set up for, say, we see demand like we saw last month times 2. What does that do? And that's not hard. Like, that's not hard to get. All you need to get that is like a true systematic threat or a spillover event in liquidity, where all of a sudden everybody and their brother wants their capital back. If you get a situation like that, they're going to want bullion. You can guarantee it. And will the bullion industry be ready for that? Yeah, but they're going to have premiums that are going to be much higher than you see now. That's what they'll be ready with.
Or you have people who are more higher net worth, like at Morgan Stanley years ago, where they thought they had a lot of physical silver stored there, and Morgan Stanley had sold the silver, right? So then they got sued a bunch of times. That was what, in the last like 8 to 10 years or something. That was a big case. A bunch of customers had that happen to them.
Yeah, that could happen after this summer with Basel III changes. You may end up seeing a lot of people in Europe figuring out, and London figuring out, that they don't actually have allocated, they just had an unallocated account, and here's the cash back, et cetera. There's no bullion involved. That's it. Like, if you want to buy bullion, here's the price. It's much higher than whatever this unallocated thing was.
So you did a video in the last month or so about the LBMA, London Bullion Metals Exchange, potentially having sourcing problems for physical metal. Ronan Manley did a extensive article on this, I think in April of 2020, how the Bank of England had to step in with the GLD and the physical markets there because they were out of gold. The demand for gold was that high back in April of 2020. So do you think there's starting to be signs then of physical metal shortages for gold or silver?
So I watch it pretty well, and everybody in our industry kind of does now because of all the different movements. There's people who want to squeeze silver and silver squeeze hashtag, and I'm publicly said, I think the silver squeeze can work, and it will. It's just going to take a while. It's a bullion war. It's not a bullion battle. This stuff doesn't happen overnight. This stuff takes years to kind of play out. But the thing about bullion buyers is they're rabid and they're very stuck in their ways. So they like to buy bullion for years. So I assume the more and more people that you have coming into this market are going to be around for many more years to come. So I'm looking at simply, what are the COMEX levels in terms of registered versus eligible stock? Really, registered is what really matters. And I think I looked today, it was like 127 million ounces of registered silver in the COMEX. And that basically just means that people who are trading in the COMEX have 127 million ounces that are being traded that are available if the situation is correct to take delivery for. And so the other, I think it's roughly 270 million ounces that are there are eligible, but that doesn't mean anything. That means someone could just simply have their silver sitting at a COMEX warehouse and they're not even trading COMEX futures, right? So, and I looked the other day and I saw, 24 million ounces, I believe, have recently been sucked out of the COMEX, being actually physically pulled and used for things. And I look at the various warehouses one by one, and the second largest bullion desk in the entire North America, a place called C&T Coins and Things. It began as a mom and pop coin bullion dealer in the 70s, but became a massive authorized purchaser of virtually any coin, sovereign bullion coin that you can think of. It's a very big business that's in Massachusetts, and they are the second biggest desk in the bullion industry in North America. And over 20 million ounces have been sucked out of their COMEX warehouse. And I know personally that they have invested a lot in minting infrastructure, and they crank out rounds and bars, et cetera. And my hunch is that the 20 million ounces that got sucked out of their warehouse went straight into retailer and wholesale bullion industry for investors to buy. And so, that's just in the last few months that happened, and so 24 million went out of the COMEX. I'm thinking 20 million went through C&T, and that 20 million that was used for investment demand. That's my hunch. So that's happening. It's working. It's effective. The people who are doing the silver squeeze are actually effective. And then you look over at the PSLV, and I'm just real quickly just to eyeball the chart. If you look at it in the last 2 years, Jason, it's doubled. It's more than doubled in terms of ounces held there. Right now, there's almost 130 million ounces. And just at the beginning of 2020, there was only just over 60 million ounces. So, that shows you that we've had 90 million ounces of silver demand flood into that closed-end fund, and in just 1 year and a quarter.
and in the last 3 months, I think in mid to late December, it was around 94 million ounces that were there. And correct. Now we're at right around 130. So it's an enormous amount of growth, but it is slowing down the last week or two. So I think true. We talked about this before we started recording, and you mentioned this a little earlier in the interview. I think some people are demoralized with the paper price not reflecting what people are actually paying for the physical metal. But the longer people are familiar with what happens in the gold and silver market, they realize that the paper price is smashed to prevent, that big run up like what happened in 2010 and 2011, where silver very quickly went from about $19 to about $49 in a very short amount of time. I mean, that probably made like all the banksters and the central bankers like crap their pants.
Oh, totally. And I think it was JP Morgan was allegedly caught naked short, and they were on their heels, and they actually had to go out in the market and bid up and buy bullion like from various places. I think that's really what did it. And the shorts on the comics kind of knew, they could smell the blood, and they just kept piling on. So you had a situation where the price within 90 days, 3 months time ran, almost three bagged, right? And that it ran very, very quickly. You can go back and look at the charts. Like if you simply searched silver prices 2010 and silver prices 2011, SD Bullion has websites for those, and you could find daily price points, and you could look at the charts and kind of see late 2010, it really got going. And then by April of 2011, it had already threatened 50. And that was,
and then look at all the rules changes that occurred.
Oh,
so
yeah.
All the different margin requirements and all the other rules changes. There was a lot of zero hedge articles with people. They wouldn't go on the record naming their names and which like hedge fund or investment bank they work for. But these were people that were trying to take private delivery of physical silver and were told, we're going to pay you cash premiums instead. Here's a lot more cash. Here's a lot more fiat instead of the metal. Or if you want the metal, I know someone that tried to take in 2009, I think, delivery of 1 ton of physical silver on COMEX. And obviously COMEX should have a ton of physical silver because they claim to have a lot of it. And it still took them, I think, 6 months to get the metal.
Yeah, Sprott has talked about that too. Like, I mean, when they actually go out and put the pedal to the metal and they go to ask, for delivery, it's like pulling teeth, and it takes a long, long time. And they've been doing a good job of late, but supposedly I've heard an interview with Rick Rule. It sounds like there's a female there who's in charge of that, female employee at Sprott, who's literally, that's her job, is to go source the silver for the closed-end fund. That's her biggest job, and she's constantly working and busy doing it. So she's been pretty busy of late, that's for sure, like as we mentioned. So there's only so many places where they have that kind of volume. It would be, the fractional reserve bullion holdings of the COMEX, and then the fractional reserve bullion holdings of the LBMA or London side of the industry. And they're two different systems. They're kind of complex in terms of the way they operate. And complexity is usually one of the ways that they kind of keep things, keep the plate spinning in the air and keep the prices at polite price points. But sometimes they lose control, and I'm guessing that we're right around that time. I still believe, the coming up next few years, we're going to make a run toward 50 silver. I mean, it could happen by the end of this year if the circumstances. I think it's possible by the end of this year we could actually have a run into the 40s. Gold could be making a run toward 2,500. I mean, here we are. It's March. We got a long way to go in this year, and Lord knows what's going to come down the pike.
Well, I think the major catalyst, and Lynn Alden would disagree with me, although this is actually still related to my point, because she says it's real yields, but for the Fed to try to cap yields, they have to expand the balance sheet.
Yeah.
So the Fed's balance sheet up until the last month or two, it had not done much for 7 or 8 months. So it had been stuck around 7.4 trillion. So there was a big move up in the Fed's balance sheet early to mid 2020, and then it took a break for months. But recently, the Fed's balance sheet is finally starting to explode. Now, that hasn't reflected in the paper prices yet, but just in the last week, the Fed's balance sheet is already up another 113 billion. So in the last couple months, the Fed's balance sheet has gone from 7.4 trillion, where it was stuck for months, and now it's almost to 7.7 trillion. So it's starting to really move.
I'm looking at the Fred chart right now, and you can see it's like a little worm going up a hill. It's pretty good. You're dead right on that, and it's been happening slowly but surely. And I expect at some point when the real crisis, gets going again, you're going to see it climb up another wall. And we had discussed this before. I think last time we talked, they've already telegraphed it in major media, financial media, that they're going to 10 trillion pretty soon. So that wouldn't surprise me if we see that happen this year.
It's basic math with the budget deficits, and that's not even counting any of the additional spending programs.
Right.
Plus, you don't have foreigners subsidizing all the treasury purchases.
Yeah, in the pre-interview, we discussed how there's people out there, Felix Zulauf, saying, by the time 2030 comes around, federal balance sheet has to be 30 to 40 trillion. I mean, it's full monetization, Japanese style, essentially. I mean,
that's if they're honest. I mean, they could move, like right now, the way the rules are written right now, they could move trillion here, trillion there to special purpose vehicles. They can start. Right. So the reason the Fed's balance sheet for the last 6 or 7 months, approximately, did not go up that much, James, is the Fed has been stuffing an insane amount of treasuries at the large banks. And the large banks are stuffed to the gills. That's why they're talking about this SLR stuff, because the banks, like, their ratios are all messed up because they have so much treasuries there.
Wow. Yeah. I mean, it is hard to keep track of all this stuff. Jason, you do a really wonderful job of doing that. And thanks for that reminder about the SLR thing. I was trying to understand why they kept bringing that up yesterday when Jerome Powell, I just briefly took cursory look on Twitter and they kept talking about SLR. I looked it up. I'm like, I wonder what that's about. So you just gave it to me. That makes sense.
It's about leverage ratios and how much treasuries the banks can have. But I mean, the banks are using phony accounting. Right. So this is all like a shell game here. It's like, where are they going to put the treasuries? Because the budget deficits aren't going. There's still two main problems, no matter what, that can't be solved right now, that no matter what game they play, whether it's Operation Twist or something else. And that's the sheer size of the budget deficits and the lack of foreign demand for the treasuries. Because for the last like 20 or so years, you had all these foreign governments and foreign corporations and pension funds buying these treasuries. And that has slowed down enormously. So those are the two main problems. And the people here in DC, they're talking about spending trillions more because now they believe in MMT and deficits don't matter.
Right. Well, they're going to learn the hard way. That's not true. And so when the IMF comes out with their MSDR and people start buying those bonds instead of the U.S. bonds, and we finally figure out that the Federal Reserve is doing full monetization of our debt and buying its own self, the U.S. dollar is going to lose a lot of purchasing power, and that's coming. And it's just a matter of how much time and how exactly it's going to play out. But that's why, for me, it's a long-term bet. Like this decade, bullion should do very, very fine. Last decade sucked. I mean, let's be honest. 2015, the lows came in really, but it's been terrible. I mean, silver has been a terrible thing to be involved in really since 2011 up until the late teens. It was I don't view my metal, James, as an investment. I just view it as insurance. So that's my savings. That's my purchasing power. It's insurance that won't go to zero. So I'm not getting 6% or 10% per year on it, but it's also not going to zero. So I'm not putting all my money into metal. Right. I guess the reason I said that is there are people out there like myself who went irresponsibly long, and I'm still irresponsibly long, and I'm sticking to it because I still think that silver has the potential to go triple digits in a serious mania. And as time goes on, I'll be reallocating that silver to other things. But right now it's at 26, or if you're buying it in the 30s, you're going to be fine. If you get it below 50, I think you're going to be fine. Well, once it gets beyond 50, we can have the discussion of where it can go, et cetera. But silver bullion should be pretty good value at these price points.
And I think the time to go, this is just my opinion, the time to go irresponsibly long and buy a lot more metal is on days when the paper prices are smashed and the premiums aren't too high. But then you have to watch it. You have to monitor and look for the premiums. And there's not a lot of places out there that track the premiums. So normally in the past, you would have to do a lot of this work by yourself to monitor the premiums.
Yeah, I use goldchartsrs.com. It's a website that's run by Nick Lard, and he's an Australian old guy. He's getting close to retirement, so I hope he sticks around for a little longer because I really love his service and his website. And he has these really great charts that read eBay sales, and so you can learn, what the American Gold Eagle is doing on eBay versus the American Silver Eagle and premium. And it was surprising of late, American Gold Eagle had been popping a lot. It was hard for people to source Gold Eagles, and there was a really high premium for Gold Eagles. It got to like 25% over spot, which is pretty outrageous for Gold Eagles. And so it's gone down recently, but I think just because of the spot prices, people they don't understand, like when the spot price kind of rolls over and goes down, like gold's at 1730. I mean, what's the downside potential of say we go into some type of crazy deflationary scenario right now, you could have gold spot go down to, who knows, for 1400, let's say something stupid like that. The bullion price would be going absolutely the other way. People who have bullion would be selling it at much higher premiums. So we're basically looking at an asymmetric bet situation here, where if you're buying bullion, your downside potential is pretty limited, and the upside in the future to come with all the problems we've discussed, it's pretty high. And it's something that you can physically have in your hand with no counterparty risk. I think that's nice because right now you have a lot of counterparty risk in the world. And so, I think I'm in the right spot. It was pretty painful to get here. There were some tough years, but I'm happy I'm here doing this now.
My last question for you before I wrap up the interview. So recently, the Commodities Futures Trading Commission canceled the case against Bank of America and Morgan Stanley for spoofing. So I think JP Morgan got off the hook with only a $928 million fine compared to God knows exactly how much in profits from paper price manipulation, maybe tens of billions or hundreds of billions over the years in paper price manipulation, along with these other bullion banks. So can the banks, will the senior banksters, can they get away with anything? Or do you think we're actually waking people up and helping people by telling people the truth that in the long run, like, people are going to accumulate physical silver and it's actually going to eventually break this scheme that's been going on for so long?
Yeah, I think it will. It's disheartening to see, like you mentioned, all the crime that's happened, the financial crime that's happened, and the fact that virtually no one has gone to prison. We got some of those guys from the old JP Morgan desk who are still in federal court, and they're being prosecuted. We'll see if they end up going to prison or not. But I monitor that. I look at that court website all the time. I think it's called Court Whisperer, et cetera. But there's like 3 of them in there right now. We'll see if they end up getting federal prison terms. But the problem, you got a couple problems. Like, if you don't have justice in your financial system and you have this situation where, it's just U.S. citizens feel like they have a certain set of rules for themselves if they're just a regular plebeian or a lower class person, versus people who are in, high net worth, who trade in these commodity markets on these huge derivatives desks, et cetera, that they're above the law. That really, really screws up the belief, the credibility of an entire country. I mean, it takes generations to get rid of that, because once it's broken, it's broken. So we're at that situation with a lot of people in the world. They just have absolutely no more belief in a lot of the institutions that used to really have some credibility in our country. And then I look in terms of like the price action, what is going to set this thing off? I think it's a squeeze. I think the squeeze is already underway. You're going to run out of silver bullion for immediate delivery at any price point that's near spot. And that's going to lead to a freak out session in the gold market too. And so it's going to be one and then the other. And the silver squeeze, in my opinion, will lead to the gold squeeze. And you're going to have a gold squeeze amongst governments and amongst high net worth investors. Because I just did a video yesterday about high net worth investors. It turns out they don't have a lot of precious metals. They only have maybe 3%. If they have, say, a high net worth family office, managing their estates. And I'm talking about people with like 30 million net worth, 50 million net worth or an up, if they have people managing their estates, the survey of 620 people who manage these estates said that they have about 3% exposure to precious metals.
Probably not even that. That's probably even overrating it. I mean, given what Bitcoin's done lately, I think a lot of that metal has been sold to go chase Bitcoin, considering like how the public comments I'm seeing from all these corporate CEOs and tech billionaires about how like everything's like crypto now.
Yeah, and this was at the end of 2019, so this is pre-pandemic. So I'm sure they've ratcheted up a little bit of both exposure that you just mentioned. They probably went to crypto a little bit too, and they probably put more into precious metals since the pandemic really kicked in. But and all the currency creation. I mean, the M1, M2, M3's explosions around the world. I mean, they would have to be insane to still be at 3%. But I've done the math. I know the math. When you live and suffer under a full fiat currency regime, you need large percentages of bullion. You need something like 20% bullion allocation. And I'm talking about, outside of your private business and outside of your domicile that you actually live and buy and live in, your real estate. You need a much larger percentage of bullion if you're living in a full fiat currency regime to balance your portfolio and to perform on a risk reward ratio as best it can. Since 1968 to 2016, the back test says that 25% gold bullion versus a mix of S&P 500 and the U.S. bonds. I mean, that was basically what the mix is. So
is that Christopher, sorry to interrupt you. Is that Christopher Cole's Dragon portfolio? Because I think he back tested 100 years and said that gold over like many decades, gold is one of the top performers.
Yeah.
Although if you look at it over a couple years, it's extremely volatile. But if you look at it over longer periods of time, it does very, very well.
Yeah, it is similar to that. That's actually Jeff Christian's CPM group back study. But who you're mentioning, who you just mentioned now, I've heard him talk about it. Chris, I forget his last name, but
Cole.
Chris Cole. So the Dragon portfolio, it's the same kind of thesis. It's like you always have a bedrock of bullion when it comes to wealth accumulation and wealth management. Like the old dynastic families in Europe always kept bullion. They always had bullion, and they always had high end art. They always had heritable land. And, if there was a revolution, they'd leave and then they'd come back later, their heirs, and reclaim the stuff. But gold bullion is pretty easy to move. It's pretty easy to smuggle. And same thing with high-end art. You kind of roll it up, you take it with you, and go off to a different country until the revolution ends.
You also have another similar asset allocation strategy is Dr. Mark Faber has something like that, but then it's similar to Harry Brown's permanent portfolio where you have like 25% stocks, 25% bonds, 25% real estate, and 25% cash and gold.
Yeah. So I'm trying to get there, and my bet is on bullion. I'm trying to get to a point where I actually have to start worrying about super diversification like that. But I need to see bullion do like 5-10 bagger in value versus other things before I actually start reallocating elsewhere. But that's my bet. And the other point is that they're running out of it. They're just running out of it, and they will. And I can tell already that they've been running out of it by looking at the overnight price action of silver. If you look at charts overnight since September 2019, when the repo loan fiasco kicked off, it really got stupid. It started to get really exaggerated in terms of how the silver price performs during New York trading hours versus how it performs outside of New York trading hours. What it shows is that outside of New York trading hours, the price of silver day to day, if you add it up, has gone exponential up a wall. And then in New York, they keep bombing it every day. They carpet bomb it every day to keep the price managed, to keep the spot price looking normal.
The other thing, James, as we wrap up here, the other major thing is on the supply side. So 5 to 7 years from now, I mean, all the economic gold at $1,000 an ounce to $1,200 an ounce, a lot of that gold is going to be gone. It's going to be mined and depleted. It's going to be pulled out. And then the miners are going to have to try to find higher cost gold.
Yep.
And then for silver, that $20 an ounce silver, maybe even 25, a lot of that silver that's economic at those prices, that's going to be gone too.
It's going to be very difficult because if you think about it, if you look at the proven reserves in the world, last places on earth that you have to go to get it is South America and Africa. Good luck. Good luck trying to mine in those two spots. Very, very hard. And so, yeah, I agree, Jason. It's going to become, like Mike said, my former colleague, my former boss, Mike Maloney said, unaffordium and unobtainium. I think he's claimed bullion is going to become. And I agree in many ways. It could become a place where you have it and you don't tell other people, and you only ever spend it or use it in the worst circumstance. It's basically the bedrock of your portfolio. You might have to rejigger your portfolio and sell some off here and there to kind of balance it. But ultimately, bullion's here to stay. As long as it's a fiat currency regime, you need to have bullion.
There's actually a lot of high-grade copper, gold, and silver on the ocean floor, but there's a lot of issues with actually mining it. So I don't know if governments and environmentalists are actually going to allow it in the first place, because Nautilus Minerals, like they had a good business plan, but their permits were denied, and they could never actually do any of the mining, even though the grades that I was looking at for the copper, gold, and silver looked very promising. So they were never actually allowed to mine, and I think they went bankrupt. And the costs of actually mining like on the ocean floor. So like in terms of like the actual normal conventional deposits, I mean, we're getting the costs are going to keep going up every few years, just because like all that high grade ore is going to get mined at a certain price. And that's just how mining works.
If we want to go interstellar as a species, looking out millennia in the future, if we want to actually go interstellar and have a diversification of risks when it comes to suns and solar, et cetera, we're going to need a lot of precious metals, and we're going to need to mine it elsewhere and refine it elsewhere, not just here on Earth. So there's a lot of things that have to happen from here to there. We got to survive.
I'm not investing in any gold mining, asteroid gold mining companies, because I'm sure there's some of those are going to pop up when gold goes to like $3,000 or $4,000 an ounce.
Oh yeah, for sure, Jason.
Okay, well, James, I want to thank you very much for your time today. If my listeners want to take a look at your work, follow you on Twitter, take a look at your really good gold and silver market summary YouTube videos, how did they do so?
So go to YouTube, just search SD Bullion and check our channel out. You'll find the videos that I make there. I put a video out at least once a week to end the week. I usually do a bullion market update, late on Friday I publish it. And so a lot of people like to watch it then, or they watch it Saturday mornings, et cetera. And then I also, lately it's been so busy, I've been putting out two just because there's enough content to be talking about. And I'm going to do a couple changes pretty soon. I'll probably do a little bit more FaceTime on the camera so people can see my face, and I'll be talking probably with a whiteboard. My belief is I'll probably be doing a lot more fundamental discussions about how the silver and bullion industry works, so people will have a better clarity and understanding of that, because we do a poor job as an industry explaining, simple things like, bullion premium. How does that work? How is an American Silver Eagles price discovered? People have no idea how that works, and it's kind of highly detailed, and it requires its own video. And if you make videos like that, I think people will find value. So subscribe there. It's SD Bullion YouTube. Go check it out, and I'll see them around, hopefully.
Great. Well, I want to thank you again for your time today, and I look to talking more about the gold and silver markets in the near future again with you.
Thanks, Jason. It's always a pleasure.